Joining me in the studio is co-founder and CEO of Outnovel, Stergios Voskopoulos. Stergios, thanks so much for joining us today.
Hi, Ray. So great to be here.
So you have described Outnovel as a novel approach to private capital. What was the motivation behind setting it up, and what are you actually doing that's different from the traditional wealth managers or private banks?
Sure. We have been running wealth for family offices in the past, but also worked at fund managers. And we realized that there is a big gap between private wealth being allocated properly into private markets. When we say private markets, it's private equity, private credit, real assets, digital assets. It could be also liquid alternatives like hedge funds. So this gap, we are aiming to fill it by providing solutions across the board using for technology. And hence, wealth be properly allocated across different asset classes and not only stocks and bonds or cash.
So let's talk a bit about the why in that. Given the macro backdrop that we're sitting in now, how do the private markets add resilience to a portfolio?
So let's assume that you have a portfolio that has only bonds and stocks. We've seen that they are highly correlated in the past few years in certain periods of turbulence, but also the stock markets, the indices are highly concentrated by a few stocks, hence they're more volatile and exposed to market risk. We believe that a modern portfolio construction, like all the big endowments or pensions around the world do, is to also include a certain percentage depending on the risk-return characteristics of the investors, private markets.
And so within those private market sphere, you have, obviously, it's a wide spectrum within the private markets. Where are you seeing the greatest opportunities right now?
So we believe in diversification, first of all. So we need to be allocated in all different asset classes. If I have to choose today and we also take a long-term approach. Therefore, we can be patient and wait for the returns to materialize. But if I had to pick three, I would say, despite what other people say right now in the market, private credit for us is a major financial innovation. From a risk-return perspective, it's a very attractive asset class if you know how to invest and select managers. Second is GP-led secondaries, I would say. So there is a liquidity need now for fund managers to provide liquidity to their LPs, to their investors. And anything AI-related from a growth equity perspective, selectively though, it's another asset class that we're looking at. I mean, it could be not the pre-IPO stage only, but a bit earlier.
And so especially with those, I think you raise a really good point that it's important to look past the headline risk like we're seeing, for example, in private credit. So when you're advising your clients on this long-term approach, how does that work in theory? How do they actually access these opportunities through Outnovel?
What we are actually innovating with Outnovel is to provide access to smaller high net worth individuals and family offices by managing the demand supply between funds and minimum tickets. And we can also aggregate investors into our own structures and hence, get a better exposure to all of these fund managers with one single exposure.
And you mentioned digital assets before as well. Obviously, Bitcoin digital assets has had a tough start to the year in terms of both downward price pressure and also the volatility. How do you approach digital assets specifically?
We believe that Bitcoin and all the crypto is here to stay. Blockchain as a technology, we believe in it at big time. Now, if we want to focus more on the Bitcoin, it's down by 50%. But taking a long-term approach, we believe it's here to stay and to grow. That's a digital gold. I would echo what Larry Fink says, that it's not a trading instrument. It's more like a hedging, but also a long-term high-growth asset class. And that's how we do it internally. We partner with experts and the best fund managers out there to structure solutions in a form of multi-asset, multi-strategy hedge funds and generate this way better risk-return profile than what a Bitcoin direct would give us or even an ETF.
So essentially helping to dampen some of the volatility that we might see directly in the market.
Exactly, because we want our investors, if they don't have any exposure to crypto and they want to take a lower volatility exposure, we provide that by structuring the solution in a way that can meet their volatility requirements.
And so you've obviously been set up in the Abu Dhabi global market. What was your decision to set up from there? And where are you seeing investor appetite from this region specifically?
That's a great question. I've been in the region on and off for 21 years, and we have always been capital providers. So we see now the momentum is actually Middle East and Abu Dhabi in specific through ADGM to be a capital formation hub. That's where East and West meet. And for us, it's very strategic to be in Abu Dhabi because this way we can approach opportunities and access opportunities globally, both West and East, but also to cater to investors across the region and beyond in also Eastern markets.
And do you see different appetites from investors globally? Like, I know that you have investors in Asia, Europe, the Middle East. Is what they're looking for different, or are there fundamentals that are the same?
I mean, even people from different neighborhoods can look at things differently.
Obviously.
But of course, when it takes to geographies, Asian investors want to have exposure for diversification mainly, right? Into Western markets. And now we see also that European investors want to get more exposure not only to US, but to Asia for more alpha. So we see the drive. There are two main drivers here: understanding, and therefore, they will look for opportunities in their own territory. But then the other factor is diversification. And then it's the relationship that we have with our investors, the trust and the confidence to our advice and what we put together. So this is a catalyst for them to take the decision and invest in different asset classes by different geography.
It's super interesting, Sturgis. Thanks so much for joining us today. I love what you're doing, really about providing access for investors here from your home in Abu Dhabi. So thanks so much for coming on.
It was great to be here. Thanks, Rachel, for the invitation.
Thanks, Sturgis.
Thank you.